welcome to the closing beat, everybody. Happy Wednesday to you. How you doing out there? Good. Glad to hear that. We are financial advisors here at Jazz Wealth that just try to teach you a little bit, entertain you a little bit, fintertainment, if you will. Just saying. Maybe we just, throw it out there. We just thought of that. Don't take it. That's our thing. We haven't coined it. Oh, we got to coin it. We're learning how to coin something. Anyways, welcome. I need a favor. I don't ask for things. I like to just provide knowledge, education, occasional jokes here and there, and build some credibility with you. But I do need one little favor. I'm serious about this one. Did you post it yet? On our Instagram stories, I need help. Can I do this or not? If you'll just tell me, take a minute over, go, just give me the yes or no. Trying to think of a Halloween costume. And I really want to do it, but I'm being told I can't do it. So if you'll just give me the heads up. What? It's just a quick poll. You'll just click whatever, and then that'll determine, what I can do or not. So I hope you'll check that out. It's not a joke either. I'm serious. But anyways, while other advisors are playing checkers, we are playing chess out over here. I had a client tell me, I have an NFT. Remember those? I have an NFT that's in my IRA, and it's not really worth much anymore. And I was like, whoop. Okay, go back. You cannot have an NFT in your IRA. You cannot have an NFT in your Roth IRA. If that's your thing and you still are into that, you cannot do that because it's considered by the IRS as a collectible. You cannot have collectibles in your IRA, Roth IRA, whatever. Think of like, some people collect old alcohol bottles, the whiskeys and bourbons and stuff. Okay, you can't have that. You can't own that in your IRA. You can't have stamps in your IRA. You can't have art pieces in your IRA. And NFTs by the IRS, well, they say those are collectibles. You have to remove it. Otherwise, penalties, fees, ridiculous. All right. Anyways, the McCarthy guy, he's out. Doesn't really matter for us. It doesn't really change anything. But the shutdown odds go up. So for anybody that is wondering, hey, by November, was it 17th, will the government shut down? Well, the odds just went up a little bit there because there's a little bit of a vacated spot in Congress. So they'll figure it out there. But notice how the market doesn't care, right? It didn't care when this was a deal, and they're going to happen. And it doesn't care now that it's done. Right? There's a lot of people that think, it's going to cause this big chaos and calamity and all that stuff. No. The market's telling you right now, they'll sort it out. Even the shutdown right now, they're saying, it'll just sort itself out. One way or another, it's going to sort itself out. So we don't have any pain, confusion, scared whatever in the market. And that's because the market only cares about bonds right now, interest rates, right? We'll talk about that here in a second. So that's the sort of, not fundamental, but sort of the social side of things. The market is interested in interest rates. They have fallen off a freaking cliff. I'll give you some stats that'll blow you away here in just a second. So now that we have a little bit of a break in yields, maybe they took a little bit of a break today, well, now we have a different response. Add to that everything we've been talking about. 67% of the stock market is oversold. We went through the stocks that are just so beaten down, and Target was probably still one of them, right? Oversold, due for a bounce because people say, well, at this price, I have to take a shot. So yesterday I shared this with you. S&P percent of stocks that are oversold and overbought. Green is oversold, red is overbought. 67%. Just like what happened last time, we get ourselves a little bit of a bounce here. If you look at the S&P, right? Oversold stocks get a little bit of a bounce. The big 7 names, actually I'll go big 10 names, oversold, the majority of them, right? So they get a little bounce, and that's enough to get us going here, which fuels the rest of everything else there. Add to that, right? So we're just putting layers on here. Add to that the technical traders that love this area here. Here is the line. We talked about this yesterday. I won't do it again. But we talk about the area that people that follow charts like this stuff, and they only follow that, this is their area. They love it. They may not be right. I'm not saying the market will definitely bounce from here. Technical traders can be wrong. We can all be wrong, right? But for the moment, we know that they want this area. That's a known area where many, many people that believe in this stuff believe it will go higher, and therefore they will take their chance. So add all that together. That's a long way of saying you have a recipe for what we saw today, right? That's it. It's fun to see that ahead of time. I just love when we can point something out ahead of time and then it happens and you're like, okay, well, this guy's on his stuff, right? And there's a reason for that. As a company, if you choose to work with us and all that great stuff, we only grow as a company if your investments grow. We don't sell stuff to you, right? So that you call us up, there's no sales pitch. So it's really, really important, and you can see that because I'm here every day, right? It's really important that we understand the markets day by day. We're not making decisions day by day, but we need to know the mood of the market every day. If you're trading, day trading, short-term trading, investing, whatever you're doing, you got to be dialed into that. The second something changes, you want to know if there's an opportunity or not. So it's really, really cool. Also helps, we were just really oversold there. And as of yesterday, you know, there's 11 sectors in the market, in the S&P, I'm sorry. There's 11 sectors in the S&P. Every single sector was under the 50-day moving average. Is that a big deal? Does that matter at all? Like, is that something, you know how I say that sometimes? Like when something happens, you go, is that odd? Or is it just part of doing day-to-day business? No, the last time that happened, and this is no joke. So yesterday, October 3rd, every sector in the S&P was below the 50-day. And that was because the energy sector pulled back. So below the blue line. Do you know the last time that happened? I'm not messing around, as Biden would say. There's no malarkey, right? Or how does he say? No, I'm not playing around here, right? I saw somebody doing a skit of him. It was so perfect, man. It's like the people that do Trump, and they're like, it's like a kid, and you go, oh my God, that's just so spot on. Anyways, I'm not joking. Yesterday, October 3rd, every sector below the 50-day. Let's just look and see when the last time that happened. You know the last time it happened? October 3rd last year. Literally to the day. Why would that be? Well, August, September, those are weak days. What did we just tell you the other day? When August and September are weak and fall more than 5%, right? October has stopped that decline more times than any other month out there, by far, right? 33 times if you want to go back to 1945. The next closest was March, 23 times. So October is known for having these attempts at putting in a bottom, right? If you were a day or two early, who cares? You're basically finding the spot you need to be in there. And so all of that just starts to add to like, okay, I'm feeling it. I don't like when the markets pull back. It makes me nervous, but I feel you, man. I understand the stats. I see what's going on. And as it plays out, I just get fired up by that, man. I just think that's really, really cool. Okay, let's move on. You got the NASDAQ, of course, the big names. Strong day for all of them. I don't like how this is going right here. You don't like to see that. A rally off the bottom with a big sell-off in one day that we had yesterday. See how it erased all of that? It's usually very difficult for something to overcome all of that and still have enough meat on the bone to get you excited, right, to invest. I hope that's the case this time, but I would prefer if it did not look that way. If we look at the Dow, of course, trying to fight off that negative, well, year-to-date gain, right? I mean, it's trying to fight that off, and it's trying at least. The Russell, not trying. The Russell is by far the most overextended index out there. If ever there was a chance, if you're a contrarian and you're like, I like that stuff when something just falls like a knife, well, you're probably already looking at the Russell. I don't have to tell you that one there. All right, looking over at gold, continuing to sell off even worse. How do you feel about buying your Costco gold now, huh? I'm sorry, I pick on people that buy gold because I see so much more out there. You know, it's a tough thing to invest in. But Costco buys a whole bunch of ounces of gold for $2,000. Well, it seems to be right about in here. And if you want to buy it, if you can get your hands on it through Costco, you have to pay $2,000. It's not worth $2,000. So more and more people will figure that out. Nonetheless, gold selling off. Let's get to the cool stuff here. I'm going to go to the 10-year. Finally, a little bit of a recovery. Finally, an attempt at a bottom. Now, I said that the other day, to be honest, so it's close, but I missed that one there. The move in the 10-year, which is what you're looking at on the chart here, this move from August till now, did you know that this move is larger than all but 2.6% of the times in the bond market, right? So 97.4, yeah, 97.4% of the time, the bond market has not moved this much. You did it, right? You're living it. If you're in this, this is history. Like, how incredible is that? Oh, you can go on to the 30-year here as well. This is even worse. The move from August till now is greater than every move in the bond market except for 1.9% of all those moves. You kidding me? It's almost the biggest move ever in the bond market in this such a short a period of time. Fascinating. I hope it keeps bouncing, to be honest, because, well, this, leads to mortgage rates, right? It's getting expensive out there. Who wants to deal with that? Let's take a look at that, actually. So I did something a little different here today. Mortgage rates, the data's a little behind. It's not 7.3. It's just a touch over that. Maybe after today it came back. Here in black is your 30-year mortgage rate. It's just an average, just plotting it back as far as we can go. You can see that in general, it's not that high relative to history, but when you come off basically free money, it feels nasty. You know what I mean? It just doesn't feel all that good. Now, everybody is comparing the mortgage rate to mortgage purchases or like actual closings, right? So when the mortgage is complete, you've accepted it and you get your keys to your house and all that. That's fun, but I'm like, well, let's do something different. Let's see what else we can share. So I took the mortgage dollars, and I want to show you the difference there because I think it's more interesting. If you look over here on the y-axis, mortgage dollars in terms of new originations, $267 billion. That's about 50% of where we were. We were at $500 billion just going back here. We got just past June. That's not that far. Cut in half, just like that. That is important, really, really important for the market, because why? It bleeds over into everything else. Think Home Depot, think Sherwin-Williams, Mohawk Carpet, Whirlpool, et cetera, right? All of that stuff. Think about it. You get a new home, you're like, I'm gonna get some new carpet. You know what I mean? I'm gonna go to Floor and Decor. I'm gonna get me some new tile, I get somebody to put it in or whatever. I'm gonna paint my walls. I need Sherwin-Williams. I need Lowe's and Home Depot. Well, if that's not happening to the tune of 50% less, that does bleed over into these stocks. They have not reported that yet, but people are paying attention to that. There is a correlation to those discretionary type items and the fact that there's no real mortgages changing. What have we been talking about? This takes time, the high inflation, the extra costs of things, the lack of being able to get things. The supply chain is not so bad anymore, but this takes time to bleed into individual stocks because they're reporting on a quarterly basis. We're looking back. We just looked back to the second quarter. All right, it was tough then, but it wasn't so bad. Now, starting next week, we're going to get the third quarter. So this is where we start hearing those things like, well, people didn't change homes as much. I mean, so they didn't come into Home Depot and buy the bath vanity. They didn't buy the faucet. I don't know what to tell you, right? That's where you're going to start seeing that stuff. So buckle down, buckle up, buckle in, whatever. All right, let's move on. Just a couple things here for you, and then I'll get to your questions if you have them. Ford in the news. Let me go back over here, actually. I want to make sure I get this right. There's just a few stocks in the news, not like the biggest thing ever here, but see what we can do. I clicked on the wrong one. What happened? I'm getting the wrong deal here. There we go. So Ford's in the news here today. They say this is the 7th offer that we've made to the UAW. You haven't heard much from them in terms of saying we've rejected that offer, we've rejected it. UAW is playing tough, saying we haven't heard from you, right? You know what we want, we haven't heard from you. So it's almost like they're going, let me see, nope, that's not what we asked for. Ford is trying to get ahead of that. I think GM actually had to open up a big credit line and stuff because they've lost some money as well, but Ford is in the news for that. United Airlines, a little bit of a boost today. They ordered a total between two companies, 110 new jets. Now, it's oversold. So this is not the news. This just participated in the oversold bounce today. And the reason you know that is because if you read beyond the headline, these orders, this is basically just them filling up slots so that by 2028, they can start getting some planes, in production. So really long pipeline for things like that. If you're in the space, you know. All right, elsewhere in the news, you got Intel. I didn't get a chance to read about this. They are trying to separate out a part of their business, the programmable sort of chip setting side of their business, next year. And I didn't get to read like how they're going to do that, if they're spinning it off and how they're going to go about that. But if you have the stock, you might want to check that out. I will be checking that out in more detail as well. Cal-Maine, just think eggs. They make eggs. Well, they don't make the eggs, but they have the eggs, and they do the thing with the eggs. So anyways, their earnings horrible. They missed by a mile there. And I believe it was one of the worst stocks today. This wasn't in the news today. I thought this was kind of interesting. So Meta, do you follow Temu? Cody, do you get ads for Temu out there?
I do not. I don't.
No.
I don't know what Temu is. You mentioned it the other day, and I already forgot what it is.
Whoa. Well, now you're going to get them because we said it.
Yeah.
So Temu is online shopping. It's Chinese-based.
Oh.
Really cheap stuff, probably in quality as well as price. And they're advertising like crazy. Don't type it. Don't.
Oh, man.
Nope. Don't type it. You're going to get them forever. So Temu is advertising like crazy. And I was like, okay, well, what does that do? The fact that they're advertising a lot, I need to pay attention to that. Who's going to benefit? Meta. Meta is going to benefit by $1 billion in added ad revenue for this last quarter here from just Temu. Can you imagine spending $1 billion on that? Now, earnings officially starts next week, and so we'll get that going there. We'll obviously have a lot more to focus on when that comes around. As far as tomorrow goes, you got ConAgra Foods, Constellation Brands. The other one was Levi, the gene makers there. So we'll look forward to seeing what they have going on. And that's pretty much all I got. So let's take your questions here. I'll see what I could do for you. They sell out of that gold all the time, huh? I don't know. I'm not a Costco guy, but I saw that come up. Yeah. Those who wanted to move have, and the rest can't afford it. Well, there's a lot of people just staying put. I don't blame them. It'll take a while. Just like the higher cost of travel, going on a cruise, milk, whatever. It takes you a while to say, well, okay, well, I have a few more dollars. I'll go ahead and do that. Prices aren't going to come down, right? And that's maybe a separate topic here, but you realize that car prices, home prices can fluctuate, but we're not going back to where we were. You can't. There's too much money out there now. You may not have as much of it now, just things cost more, but when you have these spikes in inflation over, look back generations, when you have that, prices don't go back. They can certainly dip, but they don't go back to where they were. So everybody that I talk to that's like, well, the house I was going to get was $500,000. It's 1.1 now, but when it gets back down close to 500, I'm in. That's not happening. It just won't happen. There's too much money out there. Oh, yeah, same thing with rates. I mean, how often, just take a look, how often do we have interest rates below 3%? And this is going back to before probably a lot of you, based on the YouTube statistics, before a lot of you were born. The majority of you, if YouTube is correct. Yeah, that doesn't happen. You see what's happening here, right? This whole 4%, yeah, I got down into the threes there. So, yeah, that's not something we revert back to. And if we do, you will not like the pain. What would it take to get the Fed to lower rates that much again? Pain, dramatic pain. You won't want a house if that happens. So careful there. Tom says, costume's good to go, just no paint. Well, how's anybody going to know? Right? That's where I'm stuck. I don't want to, I do something, I go all in. That's where I'm stuck. Tower REITs looking cheap. AMT, they made the bottom 25. Yes, and they're the biggest leaders in the real estate sector. So if you're basically making a bet on that sector doing well, even though this is a different industry there. But yeah, I think banks are tough. I want to get excited about banks. I think it's too early to do that. So if you're like a short-term, like day-to-day kind of a person, all right, I get that. But Sir Francis, near my home, many of the homes being sold, new or old, are being bought all cash sales still, huh? Wow. Yeah, it's kind of like that here. We're seeing a lot of prices start to fall. Oh, Tom, I see you got another shot at that SoFi. Yeah, from the other day. Do you believe potential November rate hike has already been priced into the market? It definitely has. You can look at the bond market and see. It's 100% priced in already. Not November, just before the end of the year. That's the tricky part. People think like it's got to happen on that next meeting. No, but it has been priced in, yes. Yep. I think the oil rally is still going up to 100. Yeah, so look at oil's pullback here today. Where we go? This one? Yeah, you can see it. Okay, so looking at oil's pullback here. Why? Give me something unless demand just drops off a cliff. I mean, we got to go 50% of the current demand that we have. So yeah, I do. Anything that gets overbought will pull back. Anything that gets oversold will bounce. It's just, you know, you got to, if you're contrarian, you're trying to time that stuff. I don't like that. Yeah. You like the, well, I don't know, Tom. So are you a short-term guy, or is it more like for a long-term? The captain comes over to loudspeaker, ladies and gentlemen. But he likes the turbulence there. I like it. Okay, get a little feedback on the old Instagram thing there. I like it. Thank you for that, by the way. I genuinely did not know. Wasn't sure, I guess I should say. With oil skyrocketing, what are some good sectors to look at and buy? Energy? No, oh, you did it? You typed in Temu?
Yeah.
Did you?
They also have
Yeah, but careful. Let's do the leaderboard. Take you away from that here. What do we got?
Oh, okay. Yeah. No, it's a great time over here on Temu. The leaderboard, we got Elaine, Ron, Silk, Frankie, and Aloy.
Oh, this is the old leaderboard then. That is not the new one. Frankie V is not in first place.
Oh, no, that's on me. The actual leaderboard is Elaine, Ron, Silk, Frankie, and Aloy.
Well, that makes sense because
that's yesterday's.
Yeah. Well, okay. See what happens when you tell him about Temu? Now he's buying Oakleys and whatnot. Yep.
That's great.
All right. There you go. Now you're going to see Temu. You're welcome. Now you're going to be marketed stuff. Don't buy the mask, by the way. We bought the mask. Where is it? We'll show it to you sometime. The guy that puts on the mask and you're like, oh my God, that looks so real. We bought it from that. It came from China. It looks nothing like it. It's the worst mask we've ever bought in our lives. And you'll notice that it sucks because on those ads, they don't let you leave comments. It's just the ad. You can't leave a comment, thumbs up, thumbs down, or anything. Yeah. Yeah. If you click the Temu ads, don't buy anything, they go away faster. Oh, there you go. Thanks for the tip there. Appreciate that. Okay, I'm going to wrap it up there. Get on out of here. We have a client that's in town. I'm going to go visit them and say hi. If you are in town and would like to say hi, of course, we can do that. This client chose not to rent a car for some reason. Saving his dough. That's what it is. All right, so we're going to do that, and you enjoy the rest of your night. See you tomorrow.